Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again in euro currency. So from the technical sides, we do not have a really big changes on the picture. As you can see, this was relatively quiet week due to the Thanksgiving holiday. Mostly everything on the technical side stands the same, I mean in the short term. But at the same time, in today's weekly report, we have dedicated time to discussing on the recent Fed minutes. Because at the first glance, if you have read the statements from these minutes, you could be a bit confused, because it seems at the first glance that different statements are really contradictive. Different points are contradict to each other. But in reality, they are really harmonic. And unfortunately, the market participants, the traders across the board, see only the first layer of the minutes, which we could call as a positive. So they see just the Fed is pivoting, the interest rate is coming to the terminal point, inflation is slowed down, probably it has been defeated. At the same time, consumer consumption stands strong and job market stands strong. And that, at the first glance, create really positive picture that's suggesting that we're going back to the pre-crisis time, and everything bad actually stands behind. But we have discovered the second layer of the statement, and we suggest you to read it. It's because it is vital to understanding of the overall situation that stands in the market. And as you will see, this is not quite positive. It's first moment. Second moment, we also have taken a look at the situation in Europe briefly, just to not bother you too much in the reading. So, and have shown that mostly European Union is coming to the same points, but it will be achieved a bit later. So if Fed already stands at this near the threshold level, no interest rate, the European Central Bank is still coming to it. And it means that the overall situation where Fed stands right now, United States economy stands right now, the European Union still yet to stand at some later point. I suggest that probably 2-3 months should pass more before Europe appear in the same situation, more or less the same, although it should be actually worse. It's just because Europe actually carries the whole burden of the conflict in Ukraine and the sanctions and so on. So, and that's very important. And this really brings some new vector of the analysis of the market situation. So, despite that we do not have really big shifts and changes in technical picture, it's really important moments that we have on the fundamental background. Speaking on the technical side, if you'll take a look in general on the technical picture, you will see that this grabber stands under question because market has created deep retracements below the lows of the grabber. And by taking a look at this chart, it seems that maybe we will not go up and taken out of this top. But at the same time, if we consider the dollar index, so you could see that everything actually stands okay. So you can see that the grabber here is valid on the dollar index, and it's even more on Friday we've got another one. So it's nothing to worry about by far, speaking about our previous analysis. So we still keep our short-term trading plan that suggests taking out of this top. Whether it will be just brief touch, some wash and rinse, which is very probable, or it will be gradual upward action, we will see. But market should trying to move about this area. On the 4 time frame chart, we do not have something really special, but on the hourly chart, the performance that we suggested on Friday morning actually has happened. So we said that if market will drop more and will show a BCD pullback still, we should get the second chance to consider for taking the long position. And once again, you can see that we've got a BCD pullback right to the confluence that we have specified retesting of this trend line. Now we have the guarded triple to buy. Grabber's theme is still valid. And those of you who are familiar with the Jordan Napoli techniques, entry techniques, now you could easily recognize the Minesweeper A. So since we have bullish trend, to take the position on the hourly chart, we need to wait when the market will start bouncing up from the strong support area, and hourly trend has to turn bullish. Now these 2 points have been achieved. Market is bouncing up from the confluence and trend has turned bullish. And now market is showing the minor retracement to the 30% level of this most recent upward action. That is the Minesweeper A entry technique by the Jordan Napoli. And here, if you consider taking the long position, that's the point that you could keep an eye on. Initial stop probably has to be placed below the confluence. And in general, I would say that the confluence is 103.54, 103.62 is a valid, is a vital area for the short-term trading setup. So market has to stay above it and keep going higher to actually keep the bullish sentiment. So that's what we have currently on euro currency.